Savita Subramanian joins us now with more analysis on today's market action. She's the head of U.S. equity and quantitative strategy at Bank of America, Merrill Lynch. You know, Savita, we've had some choppy, trading over the last couple of days, but there was something different.
Have.
Pardon?
We sure have.
Yeah, but there was something different about today's sell-off. What's changed? Why now?
Yeah, I'm not sure if it was sort of, some signs of a building momentum in the economy. And I am terrible at kind of diagnosing one day's performance. But I do think that what we've seen over the last, let's call it, couple of quarters has been a rotation out of stocks that have been helped by, falling interest rates, like your higher yielding areas of the market or your super high growth areas of the market, into maybe some of the more beaten down, cheaper cyclical names that could actually start to show some signs of strength in an economic recovery. So in a way, what I think is happening is a lot of these stocks that are very expensive, like today's move, you saw a lot of really expensive high growth names get hurt the most. And in a way, that makes sense to me, because if we are in this economic recovery and growth is going to accelerate, why pay these really high multiples for scarce growth if all of a sudden you can get a growth pretty much everywhere in these cheaper, unloved cyclical companies that haven't really done much of anything for the last few years now? Yeah. So I think that might be a little bit of what's going on. Granted, the moves have been very violent. Some of the data we look at suggests it's less about selling single stocks and more about ETF selling. Right. So, I don't know if it's really fundamentally driven. It might just be liquidating large positions in ETFs.
So what's the individual investor supposed to do through all of this, Savita? I mean, if the momentum stocks are losing that momentum, the high flyers, the internets, the technology, the biotechs, and they're going to take the market with it, do you start to scoop up those undervalued stocks, or do you wait for this sell-off to end?
You know what? I think that it's tough to call the end of a sell-off. I mean, I think that at this point, there are some high flyers that actually look reasonably valued. And, it becomes a much more of a stock picker's market, to your point. But I do think that, behind the scenes, we're undergoing a big rotation within the equity market. So, the way to make money for the last few years was by buying either high yield, no growth, or by buying high growth, no yielding stocks. It was kind of like going out to the extremes was the way you did really well. Right. Because we were in an environment where yield and growth were both very scarce. But now, you're starting to see some interest rate upside pressure. You're starting to see some momentum in the economy. Hopefully this lasts. And in that backdrop, I think we could see this rotation that we've been seeing a little bit of a glimpse of continue.
We have like half a minute left. Real quickly, next week really begins earnings season. Do you think that what we hear from CEOs, especially about the outlook for the rest of the year, could change the tone of trading for the better or for the worse?
Yeah, I think that the forward-looking guidance is going to be important, and I also think that what companies are going to be doing with cash is going to be a big driver. So I see the market as going through, the economy as shifting from Fed easing to companies spending money on, CapEx or hiring. I think that could be the next leg of economic growth, and that's what we're looking to hear from companies over the next couple of quarters.
Yeah, we're all going to be watching that, Savita. Thank you so much. Have a great weekend.
Thank you. You
Savita Subramanian from Bank of America, Merrill Lynch.